Give me a moment while I connect to Facebook. We'll be getting started shortly. Hope everybody's doing great. And we will be getting started in just a second here. Think we should be live on Facebook. What's up, everybody? Hope you're doing well. Welcome to the Strategic Swing Trader. I am Sami Abu Saad, Director of Education at T3 Live. Again, hope you're doing great, and we're gonna get started by taking a look at the market and taking a look at some amazing swing ideas for next week. But before we start, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss in this video is for educational purposes only. If you'd like to download a copy of my free ebook, link for that is in the description below the video. I also dropped in the description the list of stocks that I'm about to go over with you for your convenience, so feel free to copy and paste that. If you find benefit in today's video, I'd appreciate it if you hit the like button, and if you have any questions for us, send us an email, info@t3live.com. Again, info@t3live.com. All right, without further ado, let's jump right in. The market first is picture hasn't changed since last week. Last week I said it was too late, a little too late to short, and I was right, because notice last week we didn't go anywhere. We actually had a huge up day on Wednesday and then a huge down day on Thursday. Reason being is a lot of people go short or they stop out of their long positions once we break support. But if price had fallen multiple bars in a row, in this case on the weekly chart, so multiple weeks in a row, the time to short is not once support is broken. The time to short is always when price retests the declining 20. So if we base here, the 20 MA catches up, that would be a good time to short. Or if we rally into the 20, that would always be a good time to short in a downtrend. In an uptrend, the opposite is true too. Look to the left. You see that? See the way up? So when is the best time to go long? When price retests the 20. Sometimes price doesn't come all the way back to the 20, it just bases, allowing the 20 MA to catch up, in which case you can play the breakout. So that's why I said it was not really a good time last week to short, which it wasn't. You probably would have gotten shaken out if you went short, because we had a huge up day on Wednesday. And then only to be reversed on Thursday, only goes to show you that the market is not rational, it's emotional. So it overreacted to whatever Powell said about not hiking interest rates more than 50 basis points. I don't know what else he said. And then the next day, back to the same old bearish market that we currently have. Right now on the daily chart, we have a 1, 2, 3. So if we break under Friday's low, 305 on the Qs, we should be lower. Okay, if we break under Friday's low. Ultimately, I don't know exactly where we're gonna drop to, but we should retest 300 bucks. That's the prior support, and then this whole base has support in it. So the top of it around 300, the bottom I think around 260. That would be the next big thing to look for. It will take a while before we get down to 260, if we do get to 260 at all, and then after that, there's no support all the way back down to the pandemic levels, basically. After that, but we'll see how it goes day by day, week by week, and month by month, and I'll be hopefully with you along every step of the way. Okay, but for now the market remains bearish. On to the actual swing watch list for tomorrow. We got ARLP, that's coal, and coal stocks have been on fire. This is one of the best ones. So I like it as a breakout. It's not one of my favorite. It's not one of the ones that I picked for the newsletter. By the way, if you're a subscriber, the newsletter is already done. Feel free to access it. If you want to have an early purview of the newsletter, or if you'd like to wait for the newsletter to hit your inbox, it'll hit your inbox tomorrow morning. But there's a breakout on the ARLP. Not bad. Not my favorite. ATKR. The bullishness is undeniable, right? The bullishness is incredible, especially that hourly breakout. Okay, so I like it higher over the base, stop under it. not bad at all. The only thing I don't like about it is the fact that it is close to resistance. The prior top is only at 120, so it doesn't have that much reward to risk. BXC has it. Oh, it's a little too thin. I'd rather not talk about it, but has a 1, 2, 3, 4 pattern over 100.01. Okay, looks higher. Oh, energy stocks, beautiful. I dropped a list of the nicest energy stocks that I found in the description of the video. DINO looks good as a base breakout, like it a lot. Over here long, stop down here. You can look at USO also, is breaking out pretty much. USO, I don't like it. I'm not going to play it long, but it looks higher. So I dropped a list of the top energy stocks that I'm aware of in the description of the video. I put the DINO on there, but some of the other ones look good too. Again, I like it long over 43.30. Stop would be under the hourly base, which should be, the widest stop would be 40.90. The tighter stop would be 41.15. I would go with the widest, which is 40.90 on the DINO. DWAC is got a transition buy setup. Don't love it, but it's kind of interesting. It's got that curling moving average, and so I like it over 48.75, stop under 43.80, and target somewhere up here, like 60, between 60 to 70. This is obviously a stretch. Not that easy to get up there in a bearish market, but it's just a watch. IAG's gold reported on Wednesday and gapped down a huge amount. Now has a breakout, so I like it over the base, stop under it long, and target is about 260 to 270 to 280 actually. Okay, so that's the IAG. IBM, oh my god, IBM for the first time in a long time trying to break the downtrend. It's actually been in a downtrend more or less since 2013. Okay, more or less. Of course, it had some amazing moves off the bottom, like we had at the beginning of 2016. Went from like 117 to 180, but it really has been pulling back since beginning of 2013. For the first time, the 20 MA on the monthly chart is starting to curl and it's starting to point up, and it's one of the most interesting long-term ideas that I'm currently watching. So here's the idea. It triggered already on Wednesday long right here. It was really good call, a good play, but I was worried about the market. Now it triggered, it worked, and it held. So now the idea would be to play it as a breakout. It's not really a breakout, but over here long, and one can put the stop there. That's a pretty tight stop. Or if you don't want to get shaken out, my suggestion would be to put the stop down here at 130, giving it almost $8 of wiggle room, because it's a long-term play. And what if the market turns around? What if I'm wrong about the market and it, in a few weeks turns around and breaks out? Well, I like IBM a lot as a long-term play. So this would be the one to be in. Okay, so it's just an idea as a long-term play. WCC has got an hourly base breakout. I like it a lot. Over the base, long, stop, it would have to be a big stop, under 135. This is at all-time high. I mean, in this market, that's pretty good. There's not a lot of stocks at all-time high in this market, okay? So I like the bullishness in WCC, just like the whatever it was, ATKR. The bullishness, especially that hourly chart, is so beautiful. But the ATKR has resistance at 120, I think. So that's got to be target one. So it doesn't have as much reward to risk as the WCC would. But we'll see. We'll watch. Merck is very, very bullish. Now, Merck has had a big move up, and I don't like to play after a big move up unless we get a really long-term base, which we kind of did, got a base, but it looks higher also on the monthly. Look at that monthly bullish. It's not one of the ones that I picked, but it is really, really bullish, especially that hourly chart. Looks amazing on the Merck. It's not just a Merck. BMY is also bullish. That's another healthcare stock, but it doesn't look as good as the Merck. We have a position in the newsletter MO. So some of the consumer defensive stocks are still bullish. MO, KHC, which already reached target that day, but still looks higher. It's back up. Looks higher. So some of the consumer defensive stocks are bullish. And as I said, oil stocks are bullish. And I dropped a list in the description of the video. Now onto the bearish list. We have ACCD as a short, as an hourly based breakdown. I thought it was going to go higher, honestly, over like last couple days or so. Maybe Thursday, it looked like it was going to pop. It didn't. In fact, it popped on Wednesday, came back in. So now we have a breakout failure, more or less. Breakout, and then if we break under, that should be good. So I like the ACCD short under 566. Stop over 558. Okay, and target to be determined. Don't know what the target is. ALDX, as a disclaimer, is already an open position in the newsletter. Called it as a 1, 2, 3 short right here. So it's in the money by a little bit, but still looks lower. So it's not too late. Under 265, stop over 306. Okay, not too late. DPZ, short under the base. Even Domino's Pizza is not doing too well right now. Short, stop. If we look at the Domino's Pizza monthly chart, it's just been in a bullish uptrend forever. And finally, it appears to be topping out. Look at this. I probably should go to logarithmic scaling. Let's take a look at it. Oops, right here. So look at that. DPZ. It's been one of the best stocks to own since 2008. Amazing. From 260 to 560. From $2.60 to 560, and it appears to be finally kind of breaking that long-term uptrend. Finally. But it's not for sure yet, because we have to break the pivot, and we haven't broken the pivot. One of the other stocks that I don't think I've ever seen it break a pivot on the monthly is CHD, Church and Dwight. Look at this, guys. Amazing, isn't it? Look at that. I mean, going back to 96, it's never failed on the uptrend. Now, it's a boring consumer defensive stock that they're most famous for the Arm & Hammer baking soda that probably everybody has in their home. But look at the stock, CHD, in 25 years, is that 20? No, that's more. 27 years, let's just say, has never broken an uptrend on the monthly chart. Show me another stock that's never broken its uptrend on the monthly chart. Never. Broken a significant prior pivot. Okay, broke the 20 in March of 2020, but went right back up. So incredible, truly incredible. Again, as boring as it gets, but who cares? Makes money. So DPZ reminded me of the CHD because it's been on an uptrend also since it bottomed in 2008. Never broke the uptrend, but it appears to be finally breaking. It hasn't yet broken yet. We have to break that pivot and hold below it, close below it on a monthly time frame. So the CHD doesn't look to be breaking at all. Not yet, at least. We'd have to break under this pivot and close below it. Okay, on the monthly time frame. At any rate, just for fun, eBay is lower, 1, 2, 3, like it a lot. Short under 47, stop over 49.64. Like it. HBI is also 1, 2, 3. Not bad at all. Under 12.20 by 12.76. 74, give it a couple cents. And then on the way in, also a couple cents below. So I like it. IoT, disclaimer again. It's an open position in the newsletter. I called it as a breakdown over here, short, so it triggered already. And then there was an add on it as a 1, 2, 3, I think that day, under that bar. So it still looks good though, not late, just like the ALDX, open position, but not too late to get in. Okay, it looks beautiful. IoT. MULN looks lower. Notice that pop and drop. So that's a breakout failure, like it. Or you can call it a money bar, shakeout bar. So short under the base, stop above the shakeout bar. That's the thing about shakeout bars, is they make when they pop above the base, you really have to put the stop now, instead of above the base, you have to put it above that bar's high. So it makes for a larger stop, but much more secure. So I like it short, and honestly, it looks lower all the way down, probably to the prior low, 50 cents. But I would say target one, right about there, that prior pivot, which is around 75 cents, 73 to be exact. But MULN looks lower. Okay. NWG is an ADR, but has a 1, 2, 3 short under 520, stop over 528, 10-cent stop. Target the prior low, which is $5. So it has 20-cent target, but only a 10-cent stop under 20 by 28. Last but not least is the SFM, which is just like the eBay and the HBI, is a pure 1, 2, 3 coming after a gap down. So eBay, HBI, gap down, sold off, gapped down and sold off on Thursday, right? And then the SFM actually on Thursday too, and Friday was an inside bar. I don't like it when the first initial bar, the big drop, is more than 2 to 3 times the average size bar, which in this case it is. So I'm probably going to be passing on the SFM, but I'll watch it to continue basing. If it bases, gives me a couple more bars over here, then I would like that lower. If we get a couple more red bar, then I will definitely look to play it myself. Okay, so that's the SFM. All right, everybody. Hopefully I've given you a good overview, or a purview. Am I saying that word wrong? Of preview, I guess, of the week to come. My I learned English as a 4th language, so but sometimes I do make mistakes. At any rate, I appreciate you watching till now, till the end. And again, if you found benefit in today's video, I would appreciate it if you hit the like button. And if you have any questions for us, reach out by emailing customer service, info@t3live.com. Enjoy the rest of your weekend, and happy Mother's Day to all the great mothers out there. I am Sami Abu Saad. I will talk to you next week. Take care, everybody.